that is the number one way to create net worth increases is through owning where you live.
Hello, and welcome to Mornings with Joel, Commercial Real Estate Podcast, where we focus on rising stars and established players in commercial real estate and talk to them about how they are building legacies in today's marketplace. Hey, hello all. Thank you so much for joining the Mornings with Joel CRE Podcast. Yeah, I know it's not morning, but that's okay. It's morning somewhere in the world, right? So that's the way we got to look at it. So in the world it's morning, but we're happy to have you with us today. And we're very happy to have Colin Lynch with us today as well. And Colin, what's happening, man? It's good to see you again. It's been a minute.
Hey, Joel, it's good to be here. Thanks for having me. And yeah, it has been a little while, but I'm glad to be here.
But for y'all who don't know, let me introduce Colin. Colin is the head of alternative investments for TD Asset Management, which obviously is a division of some sort of TD Bank, which you're probably more familiar with. He runs their $39 billion global platform. And Colin, that's pretty impressive. I mean, that's a lot to accomplish. And I know it all started with you back in Harvard Business School. So, you don't have as many gray hairs as me, it doesn't look like. So, how in the world did this happen, man?
Well, so a couple things. One is we have grown. So we just crossed 40. We're 41 and a bit now.
Okay.
Number two is I accomplish it by shaving my head, which you too, but no. So every time I see the gray hairs, they just shave it off.
Just shave it off.
Uh, did go to HBS at Harvard Business School, and that was a great experience. And this past weekend was actually catching up with a couple of HBS friends in Toronto, and that was great. I didn't grow up as an investor. I didn't grow up in the real estate space. I didn't grow up in any of the spaces I oversee today, whether it's private credit or the infrastructure space or commercial mortgages. But I did have great experiences at HBS, whether it was teaching me about the world, whether it was teaching me about the different subject matters, whether it was teaching me on how to lead and how to be a leader of people valuable. I had good experiences after HBS at McKinsey in different parts of the world, in the US, in South America, in Europe, and in Canada. And I had some experiences also outside of that, whether it's through community organizations, through leadership in different areas, whether it was arts, whether it was social impact, whether it was the government area, also through some political activities in Canada. And all of that has helped me today from a leadership perspective, helped me from a global perspective because we invest around the world. Also helped me because I was in investment banking prior to business school and in management consultancy from a skill set and capabilities and tools perspective, whether it's analysis or whether it's synthesis. That has been useful as well. So a very unconventional path, very unexpected path, for sure. Most people would not have thought that somebody like me could do what I do because it's a very untraditional path in one sense. But I would also say, if you look at the skill sets in terms of what we do today, my experiences have been valuable in producing some of the skill sets that I apply every day in my current role.
Okay. All right. Well, that makes sense. And it shows, you weren't goofing off in college and all that kind of stuff. Yeah, at least you paid attention and got some value out of it.
Well,
They were good.
yeah, well, in college in Canada we call it university, but maybe because it sounds more sophisticated. But I did 2 degrees. I did a history degree and commerce degree in 4 years, and then I had also done another thing called an ARCT in music. And so to your point, yeah, I had 3 programs on the go and was a teaching assistant and a research assistant and also did summer jobs to pay the bills.
Wow.
So yeah, definitely wasn't goofing off. Now, it doesn't mean I had a perfect flawless record, but it was busy. So I've always multitasked. When I was at HBS, I was on 6 community boards of different forms. And I just sort of like that intellectual curiosity required to go from one area to another area, to be involved in a variety of different things. You could call it juggling, you can call it multitasking, but I just like that intellectual curiosity that's required from being involved in a lot of different things.
Gotcha, gotcha. Well, that's really helpful. And the reason why I say that is one of the purposes of the why we started the podcast. We really wanted to inspire the generation behind us, if you will, and kind of give them that insight as to how to get there. It started with me actually teaching not asset management, capital markets, for different programs here in Atlanta, and it grew from there into how can we plug people in to really understand how this stuff happens and how people get to the next level. So that's really insightful from that. So I appreciate that. And you know what? I never actually found out from you. Did you grow up in Canada or did you grow up in the States or where exactly? I guess it was Canada, right?
Yeah, I grew up in Canada. Funny enough, I was so right now I'm sitting in Edmonton, Alberta, and I did a meeting with some of our large institutional investors, and somebody said, "You don't have a Canadian accent; you have a U.S. accent." And so we pieced through like, well, I lived in Boston. No, no, that's not Boston accent. Well, I lived
Yeah.
in New York. Not a New York accent. I lived in Chicago, not a Chicago accent. And then we went, or where did I work? I worked in LA. No, not a LA accent. Well, I worked in Texas. It was like, there you go. So I did spend 13 months working in Texas, 8 months in Dallas and 5 months in Fort Worth. And apparently the accent comes from there, perhaps, according to this person at least. So,
Yeah.
but I am Canadian by background. I grew up in Toronto. I went to university, college in Kingston, Ontario, and then had my time in New York and Boston and Chicago and working in different places in the U.S., LA, in Dallas, and Santiago, Chile, and Sao Paulo, and Basel, Copenhagen, etc. And then came back to Toronto about 10 years ago
Okay.
and have been Toronto based ever since.
Yeah, yeah. I guess I was laughing a little bit because I'm like, you don't have a Texas accent. I think the person just got tired of guessing. They were like, yeah, that's it. Let's move on. No, but it is well rounded. You don't sound Canadian, but it's definitely not Texas, but it's all good. So, oh man. But that's good. That's good to know. And even right now, I know you're the chair of the city of Toronto and their investment board. So you oversee investments for the city. And before that, from what I understand, you were the head of real estate for Toronto Dominion Bank, overseeing 100 and I think it was 150 cities in 20 countries. So you've seen a lot different real estate and how it performs and how deals happen. So yeah, I mean, I'll let you finish on that. Yeah.
Yeah, absolutely. So yeah, today I do chair the Toronto Investment Board, and I used to be for TD Asset Management the head of global real estate investments, and now I'm sort of the head of all private market investments. So
Mhm.
that's the real estate, that's the mortgages, that's private debt, private credit, and infrastructure investments. So
Mhm.
from for clarity, TD Bank has its own real estate and they have branches, they lease space and the like. We call that enterprise real estate.
Okay.
I don't play any role on that. What I do is on behalf of investors, we run pooled funds and those pool funds invest in real estate or mortgages or infrastructure. So in Canada, we have the largest pool fund in the country. It is our strategy in Canada has over 20 billion invested in real estate, 350 properties, 45 million square feet, 18,000 residential units. We have a global strategy for real estate invested in the US, Europe, Asia, Australia. And then on our mortgages front, we're also the largest pool fund in Canada. And so we have $10.5 billion of commercial mortgages that we provide. So that's just a little context and background. Investments across the core spectrum and opportunistic value add. We have offices, retail, resi, industrial. And so a lot of experience, big teams, a lot of people in different places across the country in Canada and different places outside of Canada around the world. I think it's an exciting time for real estate. I think it's an exciting time for particularly real estate equity. It has been a very exciting time for real estate debt
Mhm.
and credit over the last 45 years. We've had spectacular growth on the credit side. It has been tougher times on the real estate equity side. But I would say right now, with the insight we have to the operations of real estate, there's a lot of positivity. You know,
Mhm.
in the office space, we are seeing less pronounced in the US, but even still in the US, more return to office announcements
Mhm.
by major corporate occupiers and then different governments as well. And ahead of, folks actually physically going back to the office, we are seeing leasing. So you might have an announcement, or just before the announcement, you might see the corporate occupier in the market for space.
Mhm.
And if they're it's either just before or just after the announcement. And when I say then operations of real estate, we then see that whether it's touring is way up, whether it's deals signed,
Mhm.
the amount of leasing that we're seeing in our portfolios, but also across the market is significantly up. Now, that is a very Canada, US, a bit of London, a touch of Melbourne, Australia comment. If you look at Paris and Frankfurt and Berlin, if you look at Tokyo, if you look at those markets, Hong Kong and Singapore, this is not a relevant conversation.
Mhm.
Like folks have been sort of in the office 5 days a week in the Singapore context and Tokyo context. So it's been a very Canada, US, UK, and Australia conversation. Why is that relevant?
Mhm.
Biggest hurdle for real estate, I think today, is the office when you look at the entirety of the real estate
Sure.
space. And so what we forget is our whole return to office conversation is specific to those four countries and not even the entirety of those four countries. In Australia, it's very different in Sydney than it has been in Melbourne.
Mm.
So we just lose track that it's not a global phenomenon that we're
Mhm.
talking about. And then even within countries, take Canada, which is analogous to the US in some respects. A smaller city has much higher preponderance of people in the office.
Mm.
Bigger city with bigger commutes, less office presence.
Okay. Well, that would make sense. Yeah.
So, there's been a direct correlation. Now, does it show up in the stats?
Mm.
To a degree, right? But the bigger cities have more space to lease. So you don't see it as well through the stats because of that reason.
Mhm.
But there is that sort of correlation between commute times or difficulty in getting to the office versus preponderance of being in the office, which makes the last point, which is it's all about quality. Absolutely. Highest quality tends to be closest to major transit nodes,
Mhm.
right? And the most significant transit connected offices, that also are of quality will tend to do well. So spent a lot of time on office. I could talk about the other sectors, but if I sum it all up, like I am feeling from an equity perspective in real estate, more positive than I have been since 2020
Mm.
on the space. Yeah.
Okay. No, that's good to
So
know. I did want to dive into some of the deeper subjects. I'm glad you kind of led us right down that path. So no, that's fine. I mean, I was getting there. I was just treating you gradually, just walking you gradually down the road. But but no, that's all good, and it's interesting because if you look at it from the philosophy of you want to buy when there's blood in the water, right?
mm,
Look for an example at the DC market where people are fleeing out of DC because of all the issues with the GSAs and the office space there. Yet and still, you're saying at the head of a very large fund that you see opportunity in real estate and especially in equity. So, does that play into interest rates as well, or do you think it's more of just
mm.
people coming back to the marketplace because they're tired of working at home and the kids making noise while they're trying to work or whatever the situation is?
I think it's multifold, but let me just be absolutely clear. My positivity is not connected to interest rates,
Okay.
right? Interest rates to me is icing on the cake of real estate performance
Mhm.
over the next 5 to 10 years, just to be clear.
Mhm.
It's hard for me to have tremendous positivity if you're going to, talk about the next 6 months or 9 months, because that's hard. I mean, in real
Sort of
estate, as
win.
you know, we,
Yeah.
but it's also, real estate's not stocks, right?
Right.
So, our cycles are longer.
Mm.
Things tend to take a while to play out. You have stuff that happens operationally, then it feeds into appraisals, but maybe feeds into capital markets before it feeds into the appraisals. Right? There is time for things to play out.
Sure.
But if you step back from that and you just look, to your point, are people frustrated of working from home with people in the background? Perhaps. But I think what's happening more is the senior execs leading major corporations are frustrated with having their employees at home. So therefore, they are beginning to make these announcements saying,
Yeah.
you will now work from the office.
Yeah.
So when I speak to folks, I basically ask, tell me the name of a corporate that has announced that they are implementing more work from home over the last year. To date, because I've asked this 4 or 5 times, nobody's given me a name. Right? The direction of travel is pretty clear to me, which is we are seeing more people work in the office. And why am I harping on this point? Because at the end of the day, value follows the operations, meaning people using the space,
Right.
therefore more space is needed, therefore vacancy goes down, therefore net operating income goes up, therefore value over time goes up, right? So to me, that's what I look at to understand, that bridge to value. And then if rates go down and compress the cap rate, great, right? That to me is icing, right? But the transformation of value comes from that transformation of NOI, which comes from the operational components becoming better. Right. And yes, is there less supply in the office space? Absolutely. And is that critical to those operations? For sure. Right. If people stop building new offices and you have a demand recovery, that for sure is positive. One other point, which is, there are some places that will have a much longer path to recovery. Right. So take San Francisco.
Yeah.
CBD, and take Oakland, those two. I'm going to say Oakland is going to have a longer time to recovery in terms of their CBD than San Francisco. And San Francisco is going to take a longer time to recovery than Midtown New York.
Yeah.
Right. So, that's also important when looking at where to invest and what your time horizon is and what you invest at, right, in terms of the value. If you take another sector. So, the 4-letter word in real estate today is office. 4 years ago, the 4-letter word in real estate was
retail.
retail, right?
Yeah.
Okay.
Exactly. Yep.
And how many people now are saying, actually, we're finding some good deals in retail. The operational performance for retail, surprise, surprise, is quite good. Well, why is that the case? Well, people stop building a lot of retail, right? Supply got constrained. And the view that we were all going to sit at home and order online for the rest of our lives was a little misguided.
Yeah.
At the end of the day. And did that mean all retail survived? No, that there has been some until that has not survived, right?
Right. Exactly. Yeah.
But the story is a bit positive, more positive than it was 4 years ago.
Right. And I think people had a chance to realize what people are still going to go and physically buy. Like you can't get a haircut online, right? You can't get your nails done online. Most people want to go to the store and pick their bacon out as opposed to have it just delivered, right?
Precisely.
Your point. Yeah.
Precisely. And that's been one of the key areas that we've been focused on since 2018 on a global basis,
Right.
which is essential retail. And back in 2018, it was highly overlooked. And, today it's not as overlooked.
Right.
But the income yield off of essential retail worldwide is still quite attractive. Doesn't matter whether you're talking, we're very active in buying essential retail in Europe right now. We're very active in the US. We're active in Australia. We're active looking in Canada. And why? Because the income yields are higher. To your point, you need to get things done, right? You need to buy your groceries. You need to deal with, your nails, etc. someplace. The occupancy tends to be in the 90s. Vacancy is very low, and the WALT can be 5-6 years. In the European context, you can get 15 years. The tenant credit quality tends to be very strong. You got grocery stores that are privately owned by very large very large companies that are privately owned that have hundreds of thousands
And
of
they've
employees.
survived the rough times,
They've survived for 100
Yeah.
years,
Yeah.
which, go back, a lot happened.
Yeah. The COVID and the
100 years.
yeah.
I mean, warfare's happened, right? Like,
Yeah.
in the last 100 years. So, I mean, they've survived. So, yes, in addition, the last 5 years,
Mhm.
right? If you think back just for a sec, in 2020, you had to go through a rigmarole,
Mhm.
right? You had to go, you might have had to put on a mask, you might have had to wait outside,
Yeah.
6 feet apart, being, and you might have had to be in the line for 25 minutes,
Mhm.
moving forward and forward and
Yeah.
forward to be able to go in the store. But you did, even though you had all those barriers to going shopping,
Mhm.
which proves the term essential retail.
Right.
It was essential.
Yeah. So you stayed.
Otherwise, you wouldn't have done it.
Yeah. Yeah.
So,
No, valid point.
yeah, all to say, so there's that. That's resilient. We all need a place to live for sure. Is there dynamics going on around the world as it relates to immigration? For sure. But I would submit a few other dynamics that are quite important. Number one, the immigration dynamic worldwide is different depending on what you're talking about. So Australia, high immigration. Canada still has high immigration, despite the government's announcement, still has relatively high immigration. We also have people moving from small towns to big towns worldwide. Take the case to Tokyo. Tokyo's growing, even though Japan's population is being fallen. And that's because people move from small towns to big towns.
Yeah.
In addition, we have smaller and smaller family units. So families, you have population level, the family sizes is getting smaller and smaller. And divorce rates are high.
Yeah. Is that
So-
globally, by the way, or just in
That's global comment.
Really? Okay.
Yeah, global comment. So family sizes are getting smaller and smaller. Doesn't matter whether you're talking about Tokyo or you're talking about Finland or you're talking about the US or the UK. And also divorce rates are high.
Mhm.
And the net means the number of units, household units grow,
Mhm.
even though population is flat or declining. In the case of Japan, for instance. And so therefore the demand for housing is very high. And so when you look at, go to London, what's happening? There's been a housing crisis for the last 5-6 years. You go to Berlin, housing crisis. You go to Toronto, housing crisis. You go to New York City, housing crisis. Everybody has a housing crisis. You go to Sydney, housing crisis. Everybody's trying to build more housing. And so for somebody that serves that space, if you are focused on the fundamentals, which is high occupancy, low vacancy, how do you accomplish that? I would submit by having space that serves a large number of people, which means that you're not in the $7 rent space, at least in the, Toronto contacts or Vancouver. I'd submit most cities in the US, actually, that would be quite expensive, $7
Yeah.
rents.
Yeah.
Not all of them, but several of them.
Mhm.
You're not really in that space. You're sort of in that sort of
$7 per square
B.
foot is what you're talking about.
That's right, $7 per square foot.
Right.
You're in that sort of B plus sort of space.
Mhm.
We like that space. We like quality space that's accessible to many people, and that allows us to ensure that occupancy is high, vacancy is low, and we like that on a global basis.
Yeah.
So
Mass is
You know-
a place to live. Yeah.
exactly, you do need a place to live,
And a quality.
and the cost of building new places is going up.
Yep.
For a variety of different reasons,
Mhm.
earning costs and, financing costs and et cetera. And the cost is going up and replace it. So for people to buy their places is becoming more and more expensive.
Mhm.
But they still need a place to live,
Right.
right? So that rental space is attractive. And look, the industrial space, did it take off? Absolutely. Were we overbuilt in certain places?
Mhm.
100%.
Right.
Does that mean industrial is going to zero? No. I mean, e-commerce, as we all know, like you look at the stocks, I mean, e-commerce is here to stay and it's going to
Yeah.
grow,
Yeah.
right? And so back to the supply demand, we
Mhm.
like places in the world, in parts of the country where there's limited supply and a lot of demand.
Mhm.
So for us, that's Australia right now. There's a lot of demand and limited supply. The eastern seaboard of the U.S., bit constricted on the supply, bit of demand.
Because industrial?
Industrial.
Industrial, yeah. Okay.
Yeah. So, if I step back, like, go back to 2020, like, oh, the world's shutting down. Go back to 2022, we're going from 0 to 5 on the rates. And what's going to happen to the real estate world? Meanwhile, we got some geopolitics going on, right?
Mhm.
We've got inflation all over the place. Like, right? Like, we have dealt with that.
Right.
And if you look at the indices, it looks like we're bottoming out from a valuation perspective. And historically, that is an awesome place to be if you got fresh capital to deploy.
Yeah. You got the dry powder, without a doubt. Without a
Yeah.
doubt. So that's good to know. I want to dive a little bit deeper on a couple of things because you hit the asset classes kind of at a generalistic level. We were to dive a little bit deeper. What's your thoughts on what's going to happen to the office conversion market? That was a big thing at one point until people
Yeah.
realize it's not that easy to do.
Well, that's the thing. I mean, it is, it's not that easy to do. It's not that inexpensive to do. My general thoughts are this: nobody nobody does an office conversion from a place of strength, right? So
And what do you mean by that? Just for our listeners.
yeah. So if you got an office producing great income,
Yeah. Why would you do it? Yeah.
why are you gonna, and insert the number, $300, $400 per square foot, 500, 600 to convert it?
Yeah.
So that's one. Two is obviously not all office can be converted
Right.
into resi,
Mhm.
right? Because of floor plates, because of
Yeah.
mechanical plumbing.
Yeah.
So,
Yep.
so, uh, that's number two. And number three is, even if things aren't going well, meaning you're forced to do something, and even if you got the floor plate, you likely need some help
Mhm.
through some form of government program to either incentivize you or eliminate the taxes or something or other
Yeah.
to get
Make
it
the
done.
numbers work. Yeah.
Otherwise, the numbers do not work.
They don't pencil.
And so, is office conversions the solution to the office market's issues? No, it's not, in my view. The solution to the office market's issues are people going back to and using the office. That's the solution. It's
That's
not converting your way out of it. That doesn't mean there won't be conversions,
Mhm.
but that is, call it the last stop, in my view. It's not the first thing
Yeah.
as an office owner you're going to go to. It's going to be, man, I was the lender and I got the keys thrown back to me, and I got no prospects of
So
dealing with this. So we got to do something,
you got to do something.
right? Like, that's the framework in which I have heard the office conversion story happen.
Mhm.
And, you know, it's a long process,
Mhm.
especially if you got some big offices, right? I've seen some big conversions of, 750,000 square feet, for instance.
Mhm.
Long process, expensive process, a lot of risk, and nobody does it from a place of strength.
Yeah, that's a good way of looking at it from that standpoint. It's started to die down. I've still heard of a few. A matter of fact, I know of one right now that's going on near a project that we control. But interesting, how this playing out. I guess because of all the vacancy right now, it might make sense in certain areas to tear down maybe C and D class buildings. Because
So,
I mean, you figure at 300, $500 a square foot is better to develop, right?
well, that's what I was
On the
it's
rest,
funny. I used to say, when it was a little bit more frequently discussed, yeah, that's the type of conversion that I think of.
yeah,
It's called
tear down.
tear down and rebuild.
Yeah,
That's the conversion.
well, at those
But
numbers, yeah. Hmm.
that's right. Yeah, I mean, just that's the math, right? I would submit, and I don't have any stats behind it, but when all's said and done, I would submit there's probably more of those than, call it like a conversion. Like,
Yeah,
I feel like there will be more just tear it down and figure an alternative use,
right.
than just, being constrained with, the physical construct of former office.
Right. Yeah, I think there'll be a lot of opportunities there actually. If you look at a lot of older C and D class buildings, they're in the inner core of the CBD.
Mm.
And you have all types of barriers to entry. So if you're able to redevelop in that core, you're going to have your mass transit, you're going to have your shopping often, and things like that that will bring a lot of value. So it could be some opportunities from that standpoint. But let me pivot to one other area I wanted to talk about, and that's student housing. How are you guys looking at student housing globally? Or North America as well. I mean, what's your thoughts on that these days?
The student space is going through a lot of change depending on where you are in the world.
Mm-hmm.
So, we do have student housing investments in Europe. That space has gone through the least amount of change, I'd say, in the last 5 years. And is it still relevant? For sure. When you meet with anybody across the space in Europe, they tell you that there's a huge, huge deficit of purpose-built student accommodation.
Mm-hmm.
Do I believe that? I think so. Do I believe the numbers that they present? No, I don't believe the numbers they present. Because if you believe the numbers that they present, then, you know, there is one bed for every 10 needed.
Mm.
And just logically, it's a little hard for one to sort of believe that's the case, or else you would see students sleeping on the streets.
Yeah, that's a bit extreme.
You know, they'd be all over the place, and there'd be a huge crisis, and there'd be newspaper articles all about it, right?
Yeah.
So, no, I don't believe it's that extreme,
Mhm.
but I do believe, and this is a global comment now, universities need to produce revenue, right? And in order to produce revenue, they need students because their expenses grow,
Right.
right? Most universities are just personnel.
Mhm.
That's their cost base.
Sure.
And the cost base goes up.
Mhm.
So you need something to cover the cost base. And for universities, it's from teaching, and it's from research, and it's from donations. Those are the three big costs, revenue drivers, right?
Mhm.
And research, is it going up? Yeah. But coming out to the North American context, not so reliably, right?
Mhm.
Things happen and research funding changes. So now you got donors and you got, tuition. Well, donors, very important, but can you bank on a big donation next year and then bank on the big donation the year following? Not really.
Right.
So therefore you need students,
Mhm.
right? So for a university operating model, students and growing students is key. So you either grow the students or you grow tuition, one or the other. And so that's the reality. So you can then say, okay, look, PBSA or student housing, uh, yeah, attractive space generally.
Mhm.
However, now you get into, you got announcements out of the US, and so you got to factor that in,
Yeah.
right? And, everything from visas through different caps on students, just that needs to be factored into the calculus.
Mhm.
Um, You also have changes in not just in the US, a change in Canadian government policy as it relates to immigration, targeting post-secondary, i.e. colleges, universities, their students. And so you got to factor that in as well. And so what I'm saying is you got to go jurisdiction by jurisdiction. You got to go university by university and make a conclusion based off of each university. University operating within the context of a big city, university operating within a college town,
Mhm.
and then you also then have to look at the nature of your agreements. Meaning, are you taking the leasing risk, or are you leasing to the university who then leases to the students, right? And two different businesses. I'm going to say one is more operating business, and the other one is more sort of a call it a I don't want to say ground lease dynamic, but more of a
Mhm.
pure play on the real estate. So all that sort of adds up. So is the space tremendously attractive? No. Is the space attractive in parts of the world? Yeah. Are there question marks on the value in other parts of the world? For sure.
Mhm.
But long term, and I'm talking decade perspective, the reality is if a university's in business, it's going to have to grow tuition or grow the student.
Yeah.
That's
The other.
just the reality of the university game.
Yeah. Yeah. That's kind of intriguing. Everything you mentioned, I completely agree with. But it's amazing that you would, as a fund, would only have investments in parts of Europe as opposed. I forget
Oh,
what
sorry.
country you said, but
Yeah, no, we have investments in Canada as well. We have some in the US. So so it's a good call out, but we have investments in different places. I would submit some of those investments didn't start out as student, meaning some of them started out as multi-unit residential, i.e., just an apartment building,
yeah,
and then over time, as the university grows and grows and grows and grows, over time that apartment building becomes close, in some instances now 100% student.
hmm
Um, that's the case for apartment buildings we have in London, Ontario, in Montreal, Quebec, in Canada. Two examples of several where that's just the case. The universities just grew,
yeah,
and they effectively take over apartment
right,
buildings that were more general use. So, and in the U.S. we have it as well. So we do believe in it as a theme.
hmm
Um, you know, but again, just by caveats, right? Like, is it tremendous demand and no supply? No, I don't believe that at all. But I do believe universities will continue to grow because that's their business model.
hmm
But there will also be universities that will cease to exist, just to be
yeah,
clear.
yeah,
So one has to really understand and go university by university by university and make a determination as to whether you want to be tied into, that university,
hmm
because effectively that's what you are doing when you're buying student accommodation that relies on students from a particular university. So you really have to
yeah,
understand that.
yeah, yeah. So it's really at looking at it at a micro level as
Mhm.
opposed to more of a broad. I like this city, so we're going to invest in this city. You're
Yeah.
gonna look at it.
Yeah.
You're gonna look at it piece by piece.
Yeah, you gotta do a lot more than that. Yeah, for sure. And that's just the nature of underwriting. You almost make the same comment, with offices, right?
Mhm,
Like, and especially right now, there I was walking in London, the UK, in
mhm,
central London. London has three CBDs, West End, Central, and Canary Wharf. And I
mhm,
was walking in central London, walking down the street. And on one side of the street, close to the tube stop,
mhm,
the rents are £100 a square foot. And then you go just around the corner and a little bit over,
mhm,
and the rents are £60 a square foot.
mhm.
And the £100 a square foot building is fully occupied, the other one is struggling. So,
Wow.
you know it is a stock picker's market right now,
Mhm,
right? And that's the case for, student housing, as is the case with office. And frankly, like, it wasn't the case, right? If you go
mhm.
back 5 years, all office bad, didn't matter what you had. All
Right.
retail bad, all warehouse good, all apartment good, right? Right. It actually really didn't matter. So it's
Right.
it's healthy to go back to a bit more of a stock picker's market.
Sure, sure, sure. Let me ask you a couple of other things real quick that I wanted to dive into. What's your thoughts on development? Because, that ebbs and flows. There's particular times where people are hell bent on development, other times they're like, no, let's just buy something existing. So what's
Yeah.
where are you at with that at this point?
Yeah, this is one of those times where you buy something existing,
Okay.
generally. I mentioned financing costs. Now it'll transform, I think, but right now it's very high.
Mhm,
Number two, weaker market. Not really a good time to deliver new supply
mhm,
unless you're pretty sure on A, top quality, and B, good pre-leasing, right?
mhm,
So not to say no development, we still do quite a bit of development,
mhm,
but it's certainly much lower than what we used to do,
mhm.
because, the math beats work, and we went through massive inflation on a lot of our hard costs.
Yeah.
And so, reality is, even though that has ebbed or come down a little bit, go back 5 years, some of those costs doubled. The math is the math, right? And you have to
Right.
have a premium for the risks that you take,
Mhm,
right? Whether it's construction risks and cost overruns, whether it's if you haven't got the permanent risks, permitting risks, whether it's leasing risks, right? All of that has to be accounted for.
sure.
So when you account for that and you look at, I would say something uninspiring is like a 5% return on cost if it's a, in the single digits IRR. That's highly uninspiring for
Yeah, no,
development, but
nobody's gonna do that. Yeah, yeah.
you'd be surprised.
Okay, all right. Well,
You'd be
answer
surprised.
that statement.
Yeah, you'd be surprised.
Okay.
There are some people that have land and they got to do something with it because they got debt on it,
Yeah,
right?
yeah.
So
So no matter what it is, you
cash go-
gotta do something. Yeah,
got cash going out the door.
yeah.
So what are you going to do? So some people have are I can tell you definitively some large entities are building to numbers that sound like that
Wow.
today. Okay, so
No, I get it.
but
You either sit there and lose money, or you do something to give yourself a fighting chance
yeah,
and recapturing it. Yeah, I get it.
yeah.
Yeah,
But to your point, yeah, you should be getting better than that,
yeah,
right?
yeah.
And I would say in this market, it's not impossible, but pretty hard to orchestrate better than that numbers versus buying fully leased, fully occupied, good wall IPP at good, and you can still get in there at good cap rates. So if you can still get in there at good cap rates, and you have a much lower risk profile, and then you can add some leverage that's going to be accretive relative to those cap rates. And there you go. You can do double digit IRRs with doing, what is it, 1/10 of the work that you would do on the development.
Yeah,
So therefore, in my view, right now, it is, advantage IPP,
yeah.
right?
Until that
And it's not
shifts and the
until
occupancy
like
is full, yeah, and then you got to go back to development. Yeah,
that's right, right? So ebbs and flows, right? But where we are in the cycle, it's advantage IPP, and will we be there 5 years from now? No, right?
right.
Because the cycle will play, the fundamentals will continue to strengthen,
Mhm.
and it will make sense to build development.
Yeah, yeah. And I think even today in some areas, in infill opportunities, there might still be a play, for
Mhm.
development. Now, granted, if you're doing something rural on the periphery of a major city, that
Mhm.
might be a little tough. Yeah, definitely
Yeah,
cash flowing assets, but yeah,
no, that's right, and that's a good caveat, which is I didn't say no development makes
right,
sense.
right.
I just said advantage IPP. There will be scenarios, and to your point, like this is a time across everything, right? Resi,
Mhm.
across office, across retail, like location that like matters a
Yeah,
ton
yeah,
right now.
yeah.
It matters a ton,
Mm.
and it always matters in real estate, but it matters a ton.
Even right now, yeah,
Yeah.
yeah, yeah.
So
Absolutely.
you just have to have that right size.
Mhm.
So whether, 200,000 square feet in retail space versus 2 million, right?
Mhm.
Like the right size, the right location, the right format in the
Mhm.
retail space matters a lot too. Omni-channel. Yeah, you have to put a lot of thought, but can you make money in development? For sure. You just have to be pretty precise as to what you're doing.
Yeah, yeah, makes sense, makes sense. I do want to dive into one thing briefly that just seems to be a constant issue in the marketplace, and that's the challenge of affordable housing. And what people don't see often is investor demand. You're wondering, why is that apartment priced at the price that it's at? Well, it's because it cost this much to build, or
Yeah.
we had to pay this much because the seller wanted this much because the investors demand as much, and they're trying to hit a certain waterfall. How do you, and obviously you're on one side of that coin, but you have the intellect and you've been around the world to see this issue. And like you said, affordable housing is an issue everywhere. But at the same time, investors want, 7, 8 return on costs. They want IRRs in the 20s. And, so how do you blend that when it becomes very difficult to satisfy both ends?
Yeah, very good question. Because earlier today, I got a call from somebody in the government of a big city, basically saying, you should take another look. There's been some big government announcements. You need to take a look at building affordable housing. And, we as said city are going to be prepared to partner and et cetera, et cetera. And they're calling me because, people haven't been building.
Yeah.
And they haven't been building because the math doesn't work. So
Right.
therefore nobody built.
Hmm.
You need partnership. When I say partnership, incentive from governments to help make the math work from affordable.
Period. Bottom
affordable
up.
perspective,
Yeah.
right? So,
Yeah.
there's a menu of different things. There's property tax abatements, there's grant options, there's ultra low cost financing, there's whatever you want to call it.
Sure.
You just need that. That's just the math. I just talked about cost inflation. Absolutely. Is it can government announce some initiatives? Is it land? Is it the government contributing land? And that's a big cost reduction.
Yeah,
Is it
it helps.
is it speed through permitting process such that it happens in 2 weeks, years, right?
Right.
That takes
As opposed to 2 years.
right.
Exactly.
So so you need that. That's number one. I used to be acting chair of the board of Toronto Community Housing Corp. Toronto Community Housing Corp was owned, it still is owned by the city of Toronto. It had 55,000 units, right? There are 110,000 people in the city of Toronto living there. It's social housing. So let's just be clear. Social housing is not, it is affordable housing, but it's called deep, deep affordable housing versus affordable housing.
Like 20% AMI
However,
or something like that is what we're talking about.
yeah, so we used to use it in the form of rent geared to income.
Okay.
But yeah, I think you could use that same. I'm just doing the math in my head. Yeah, about 20%
About
of market
20%.
rent.
Okay. Yeah.
Yeah,
That's what I was.
whereas affordable, we tend to consider it like 80% of
Yeah.
market
Yeah.
rent.
60, 80. Yeah. Somewhere in there.
Yeah. So the point I make is informed by TCHC, but it applies to affordable. You have to have the right type of units
Mm-hmm.
in the right type of community. So let me explain both of those points.
Yeah. What does that mean?
We have had in the city of Toronto, using that as an example, a lot of condominium built for sale units. And the built for sale units were built with, let's say you got 300 units, half were studios at around 400 square feet.
Okay.
A third one beds at maybe 550 square feet. And then the rest might be two beds at 700 to 750 square feet.
Okay. So like hotel room size. And
Mhm.
yeah, for the most part. Yeah.
I would submit that's pretty hard to raise a family in a studio.
Right.
That's all. So what we have found is that we have a disconnect between what was being built
Mm-hmm.
and what we actually needed. Right? So that's one part. Another part is back in the 60s and 70s, we built apartment buildings in ways that were disconnected from major infrastructure.
Mm-hmm.
So, I mean, transit or schools. And we sort of built them in ways that produced challenging sort of accessing,
Mm-hmm.
meaning the built form was 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 very disconnected from the street.
Mm-hmm.
And what I'm basically making the point today is that in addition to having the right unit mix, you also have to have the right mix of tenancies. So market, affordable, deep affordable.
Mm-hmm.
They have to be sort of built in the right way. So in my view, you can't have the deep affordable section over here,
Right.
and the market section over here,
Right.
and the affordable section over here.
Yeah.
Right.
Yeah. That doesn't
and-
work. It's just a ghetto at that point next to.
Correct.
Yeah.
So so all of that has to work well.
Yeah.
Right. And
Get
from
together.
being on the board of Toronto Community Housing and seeing some of the issues from developments in the 60s and 70s, I would say today I'm not sure we've learned all those lessons. And the reason why that matters is because somebody has to run these over time.
Yeah.
And the math is the same, meaning I say math is a law, right? It's not a principle or theory.
Mhm.
Math is a law. So if you got your revenues, whether it's either you're collecting it from tenants or the state's chipping in, whatever your revenue is, but your expenses are going way up because this whole thing has been constructed in a terrible way and it's not suited for the people living there, then guess what? It's not going to work.
Right.
And then the value of the whole thing collapses down.
Yeah.
So, we have to get that piece of the equation right,
Mhm.
which I think is sometimes overlooked. but coming back to your question, to get more of it built, yeah, you need some form of changing that equation. You get land costs down because it's getting pitched in. You get financing down. You get some form of property tax abatement. You mix affordable and rental. Affordable rent versus market rent.
Market rate.
You have to get that correct. You have to have the right amenity package, the right units in terms of square footage. And when you get that, you can get closer to that pro forma versus, some of the examples I described
Yeah.
that are real live examples, not theoretical. As I was thinking of different projects where I'm like, it's not going to work. It's not going to work as an affordable rental. It just won't work when half the units are studios.
Yeah, no, I completely get that. And I was actually going to go back to that point about, having a 400 square foot unit and then trying to sell that on the open market. I mean, that's tough. That's really tough to your point, right? So it's got to be something that will work for the masses as well as work for affordable, so
Yeah.
yeah,
Yeah,
which is why you need those subsidies and abatements and this, that, and the other.
That's right. That's right. It's exactly right.
Yeah, yeah. No, very good point. Very good. One thing I mentioned offline that I wanted to cover just briefly, two things basically is as Canada, you're part of the Commonwealth. Obviously, your reach goes well beyond that, from that standpoint. But I was in the Caribbean recently and I didn't see much of a footprint of TD, in different parts of the Caribbean. Didn't know if there was some of your competitive banks or competing banks are. But I haven't seen much of you guys down there. Is there any reason for that as to why you've stayed out of those areas where it seems like investment in infrastructure and other things might be, really desirable? Or is it just a matter of returns? Or, I mean, sure, there could be 100 different issues, but some of those countries are part of the Commonwealth. So that's why I was kind of curious.
That's a really good question. So from an overall TD perspective, the fully transparent answer is I'm not 100% sure. I know that TD has focused a lot on the US in terms of our retail banking and commercial banking presence and TD Securities. I know some of the competitors have been materially in the Caribbean. As to why, I don't know. But from a investment perspective, so infrastructure and real estate and credit, really there's two things that come to mind. Number one is size, and number two is liquidity, and they're kind of related. So let's take liquidity. When we look at a market, we look at the depth of transactions in that market. So is it easy to buy, and more importantly, is it easy to sell?
Do you get it?
So that's right. So you need that, and in smaller countries around the world, in the Caribbean, for instance, the sell is the harder part to answer, particularly, and you got to answer that sell if there's economic volatility. Meaning, put differently, few people are super concerned about selling in great times, but most people want to sell in bad times, but then few people want to buy in bad times. So you have to sort of measure that. You also have to look at the depth of the market. So on the one hand, we don't have desire only to do big deals, right? Some people do, right? They want to buy only the trophy office asset.
Yeah. Times Square, Manhattan, right?
That's right. And that's their strategy.
Yeah.
I would argue a strategy solely focused on that has risk, but that's what they want. So we aren't in that bucket. But similarly, we aren't in the bucket of buying super small, right? So in the infrastructure space, we call ourselves mid-market. And so we're looking, to put out is $100 to $300 million space. And then into sort of a platform that then can grow and grow and grow and grow and grow up to $1 billion, for instance, equity investment. And then you might have another investor in that with you. You might have some debt on that. So when you look at that, that might be a $3-4 billion entity. There are a few of those in the Caribbean from an infrastructure perspective, but not a ton. So then there's a question about how often do certain things trade? Is it really a development play fully? Is there income associated with that and the like? So we haven't done anything in the Caribbean from an infra perspective. We haven't done anything in Latin America period, from an infra perspective. However, we are looking actively at Latin America. So not yet at the Caribbean, but further south, in places like Chile. And as we get our sort of feet wet in that part of the world, never say never.
Right.
So that would be my answer there. Over the years, I've been all over, so I've certainly looked at things in India. I've looked at things. I've looked at things in Africa. I've looked at things in the Middle East, in the Gulf region. I've been in Southeast Asia. We don't close our mind to things, but the liquidity, the transparency of regime, and the depth, the size opportunity that we can invest in are some of the criteria that we look at, and that's sort of what's guided how we've invested in certain places. So, do we invest in the UK? Absolutely. Do we invest in things where the value traded down 20%? Yes. Did we step in on very highly attractive assets that were impossible to reach prior to 2022 when they had all the issues with the Liz Trust budget and all that stuff? Absolutely. And have we done very well since? For sure. And if we needed to sell, would there be tons of buyers for it? Absolutely. And did we do the same thing on an industrial warehouse portfolio throughout the UK? And did we do that for 30 apartment buildings in Finland? 100%. And we're looking to do that in other places in the world? 100%. So right now, we see opportunity in the US right now, actually, where you've seen assets trade down 20%, 30%, 40%. Some of that's justified. Some of it's not, in our view. Some of it's high quality stuff that you can get at a discount. So I give those examples to say, right now, there are some screaming buys in highly liquid markets where we can deploy capital very quickly into standing income producing properties that weren't available for sale prior to 2020. And we can go move in and step in and buy super quickly. And it has all the characteristics I described. So we're very focused on executing there right now. But that doesn't mean that we would not execute in the other places I discussed. But it does mean that we see some very material sort of double-digit IRR opportunities without actually taking on a lot of risk right now. In some of the places I just mentioned.
Okay. Well, that makes sense. Just one thing I did want to ask you about as relates to, and I got to ask this because I know my listening base, and if I don't ask, they'll be upset with me.
Okay.
So,
Go ahead. Go ahead.
what's your investment thesis? Let's talk about the United States because obviously that's the bulk of my audience. What's your investment thesis on the United States? What do you have an appetite for? Is it in your core bucket? Is it in your value add bucket? What kind of things are you have an appetite for?
Yeah. So let me begin by saying that some people have the philosophy that if they're going to go abroad, so in the case of us in Canada going to invest in the US, they cannot invest in core, but they have to get a value add and opportunistic return because they're going abroad.
Right.
We don't have that philosophy.
Okay.
At all. We believe in a diversified portfolio. If you just think about it logically, the argument that you go abroad and therefore you need a higher return because why? You're taking on higher risk. So therefore you need a higher return. Okay, so if that's the view, and you view going abroad as riskier, then why go do even riskier things like development if you believe that going abroad is risky?
Yeah.
Why double up on the risks then?
Well, you wouldn't do it. Yeah.
Precisely.
Right.
So we look at depth of, some of the characteristics I just described. Depth of the market. Well, U.S. is the deepest market in the world.
Yeah.
Places to deploy capital. Well, U.S. has many places to deploy capital. Across and very attractive opportunities on the core and value add opportunities. So all to say, yeah, we look at the U.S. across all three.
Okay.
We think the biggest opportunities right now in core. Why? Because pricing has gone down. So if I don't have to take on a lot of risk, if I don't have to do a ton of work, but I can get a double-digit return by virtue of having capital, and that's a great place to be.
Yeah.
So we like that. Now, what do we like? Yeah, we like essential retail as we talked before.
Okay.
So we like in grocery and grocery boxes and things close to grocery like that. we are looking at apartment buildings in places. So there's a big trade out of centers. Nobody's going to live in urban centers. Nobody's going to leave. And there's some new multi-res built in the way, by the way I described, meaning with the units that could be rented
Right.
by individuals and families.
Right.
And we can get that at good basis
Mm-hmm.
in attractive locations in big urban centers with high occupancy. So we're excited. We have some things in Illinois we're looking at. We're looking at things in Florida we've looked at. Now, Florida, you got to be a little careful a little bit with the insurance market and things like that. But
It's a big deal. Yeah.
mm, but there is a great demographic move in Florida that's is very growing. We have looked in the past in Texas, less so now. There's been a lot of supply in Texas, but we have looked at that. So resi interested, essential retail interested in the U.S. We have had and still have investments in the life science space. Is that area going through some challenge? For sure. Do we feel comfortable with them? Yes. Why? Because we have been invested in very specific nodes in the life sciences space, not dependent on conversions, but in purpose built life science properties in San Diego, in the Cambridge, Boston area. So we've had some conviction there. So right now, those would be the areas where we're looking to deploy fresh capital into. Deal teams are active right now in the spaces I mentioned. So primarily resi and essential retail. We are aware that there's probably an opportunity or two in the office space. So we are call it hanging around the hoop for that.
Okay.
Right now the warehouse space in the U.S. is a little bit less interesting because we had a lot of buildup in the warehouses, and so a bit of an air pocket right now in that space. So we're watching that. But the two areas I described would be where we're focused on in the U.S. Geographically, huge. Obviously, we know the population move, and we've had an overweight on the Sun Belt for a long time.
Right.
The supply response in a few places, like I mentioned in the resi space,
Mhm.
but also in the industrial space and in certain places like Texas and in the Inland Empire in California has been robust. So, we're a bit more cautious on the Sun Belt and where we've seen people trade out,
Mhm.
like they did in Chicagoland, certain places in New York, around New York, New Jersey, we've been snooping around there as well and looking at opportunities. Atlanta, not bad place, significant population growth, etc. So though I've just named a few areas,
Sure.
and eventually,
Mhm.
you know, there'll be good opportunities to invest in on the West Coast. Mm, it's just we aren't focused there right now because it's a little further out for us.
Gotcha. Gotcha. So as a fund, are you guys more do you do any LP or are you straight direct or are you programmatic? I mean, what's you know,
Yeah.
the man
So
of the fund?
on a global basis, I'll walk you through each because it really depends. So
Oh, okay.
on Canadian real estate, we are GPs, we invest direct. There's one exception to that where we LPs, but we are on the investment committee. So we approve everything. So,
Right.
but other than that, we're, direct, we're GPs. International real estate, what we call global real estate. We are LPs and funds, and we are direct. And
Okay.
our goal is to get to at least half direct and half on commercial mortgages. We're direct
Mhm.
with a couple caveats where we're fund investments, and largely commercial mortgages we're first position A note provider. And so we amplify a couple times with high yield, and there we do it through being an investor in funds, but there too, we sit on investment committees to approve everything. So that's commercial mortgages. Global
Leverage
infrastructure.
risk. Yeah.
Yes. Yeah, exactly.
Yeah.
Global infrastructure, we're direct, we're GPs. And then private debt, we're
Mhm.
directees, private credit, direct GPs.
Okay. So in the US, for an example, you would be, let's just say from an equity perspective,
Hmm.
would it be more, it sounds like you're more direct, but you will consider LP
Yep.
in the US.
Exactly. That's
Okay.
exactly right.
Okay. All right. And programmatic, I would think at some point if it made sense.
Yep. Precisely.
Okay.
Well
Right.
put.
Yeah. Yeah. All right. Well, sounds good. Colin, like two homies getting together, you don't even keep track of time. I don't know how I'm talking now, so we just been going and going. So, but I can't let you go without covering the Black Opportunity Fund. I did at least want to address that. I know you said that you still have some interest in it. So just as an overview, so that
Mm.
our listeners are aware of it and might have interest in it, either participating from an investment or vice versa. What could you tell us about it?
Yeah, it's a fund, Black Opportunity Fund, and also BOF Capital. What it does is it helps, Black-led, Black-serving organizations in a couple different ways. One, grants to charities, nonprofits to do amazing things, largely to help them scale.
Okay.
What we found, if we go 5 years ago, 6 years ago, researching and spending time. When I say researching, I mean having thousands of conversations with organizations. Amazing work, subscale, and difficulty attracting capital. So, to nonprofits and charities, provide grants. To businesses, through Black Opportunity Fund, below rate market loans. So, in addition to grants as well. The grants are frequently tied to programs that help those businesses scale. So whether it's, how to manage growing number of employees, how to separate business from personal books, how to deal with taxes, and et cetera. We provide education programs. We partner with other organizations that provide education programs. We also found a number of organizations were having trouble getting loans from banks. And so we partnered with banks, TD, CIBC, BMO, to provide programs and loans to organizations that were declined funding
Mm.
by banks to help deal with those issues. Where we had a number of specific programming. So whether it's for food entrepreneurs with DoorDash, whether it's for creative talent through Amazon, whether it's through sickle cell through Walmart and the hospital for sick kids across Canada provided an amenities fund, meaning it provided capital for patients and their families going through sickle cell treatments at 26 children's hospitals across
Wow.
Canada. We provided that. That's 3 programs. There's many others that we have done. And then BOF Capital is the private equity, growth capital, housing side.
Okay.
And so 2 funds, a housing fund is designed to provide families with the opportunity to own their house versus just affordably rent.
Okay.
So it's a shared ownership model where the down payment is provided partially by BOF Capital in partnership with an organization called Orboro, which has been doing this model for quite some time, and by the homeowner, and so that they can participate in the equity ownership, because in Canada, that is the number one way to create net worth increases is through owning where you live.
Sure.
And then also the growth capital, which is, we have the problem of many businesses that have 0 employees and 1 employee and then can't scale.
Yeah.
And so to help with that, BOF Capital makes growth equity investments in the businesses. So that's an overview. There are hundreds and hundreds and hundreds of people involved across the country. When we do grants, it's not just, hey, we're just going to give out money. We have a theme, whether it's education or healthcare or social justice, criminal justice, or arts and culture. We have experts with the background in that area. They adjudicate, i.e., they receive applications, determine who should go through. I co-founded the Black Opportunity Fund, sat on the board. I played no role in the grant process at all. Never wanted to, shouldn't. Don't have the expertise, right? It's the people that actually know their stuff that are able to power up the organizations that deserve to receive the capital. And so as been going on, for, as I mentioned, since 2020, hundreds and hundreds and hundreds of people, organizations have been helped. We've raised tens of millions of dollars, and we've continued to try to make good impact.
Yeah. Well, that's very impressive. So it's really across the board. It's certainly not just real estate. It's all kind of
No,
like that's impressive. Very, very impressive. Is it just
Thank you.
Canadian or is it beyond the borders?
So it is just Canadian, but as I say in a few other areas, we have no pride of authorship, meaning
Okay.
we haven't copyrighted the business model. Yeah, so
Yeah.
it could be copy and pasted and applied wherever in the world, including wherever in the US it needs to be applied.
Okay.
Um, we just partially because we did get some funding, moderate, very, very moderate compared to the private sector from the government in Canada, and so there's some technicalities on that, but also, frankly, expertise. Like when you look at the board and when you look at the people that have been involved, they have deep expertise in their areas. So we've had Olympians being involved on the sports side, on the board, helping to figure out how we help there. We've had deans of different universities involved on the education side, et cetera, et cetera. The folks that being in Canada, I think we would feel inadequate
Mhm.
coming up with the solutions that's going to work in Los Angeles,
Yeah.
right? Like, and that was part of our whole point. I mentioned thousands of conversations. It was because we wanted to create something that actually responded to the true need versus what we dreamt up and thought the need
Yeah.
is,
Yeah.
you know, rather than we're all, sitting at our homes because we did a lot of this work in lockdown. But rather than sitting in our homes and thinking, oh, yeah, I know what they need up there, you know,
Yeah.
uh,
The
we
expertise. Yeah.
we brought the expertise. We had town halls. We had many, many town halls,
Okay.
where we just listened. We produced a report. Yeah, it was called the 100-Day Report. We spent 100 days listening and produced a report on what we actually heard. And I think that was important. That not only, I mean, you come up with ideas that actually hopefully meet the need, but also demonstrates to people they actually care on actually meeting their need versus, trying to look like a hero or whatever it is,
Mhm.
right? So that was important.
Wow. Well, that's pretty impressive. I mean, I like that it's not just centric to one thing, because when you talk about a race of people, I mean, you got such diversity. I mean, this everybody doesn't want to be in real estate, right?
Yeah,
So we want to be in arts, music. I mean, there's everything. So
exactly.
we're not a monolith.
And also, by the way, like
Mhm.
people of all ethnic backgrounds are were and are involved with the Black Opportunity Fund.
Okay. I'm glad you mentioned that and brought that
And I
up.
think that's from day one, we've been, that's been important, even on the board.
Yeah.
We need people of all background. And, we have clarity of mission,
Hmm.
and that clarity of mission has been to help those organizations that have been underserved.
Right.
We've been, and I think it is important from day one, very, very welcoming. And the ability to raise that amount of capital has been sincerely helped
Hmm.
by an awful lot of people of all backgrounds
Yeah.
that have contributed, that have advocated.
Mhm.
And, I mentioned hundreds and hundreds and hundreds of volunteers,
Mhm.
right? Volunteers.
Mhm.
In the
Big
early
word.
days, there was no staff for BOF at all. Now we have people running because we raised the capital and we can pay them and they can run the organization.
Yeah.
Well, a lot of people, but we had people to run it. In early days, first, I'd say 2 years, and there's no staff, and so the board was the staff, and we were also and we still, volunteer, right? And so I think that's important to know, but also important to know beyond those hundreds and hundreds of volunteers were hundreds and hundreds of more people that arranged the $10 million TD commitment, for
Mhm.
instance, or brings the multi-million-dollar National Bank or Royal Bank of Canada or BMO or CIBC commitments, et cetera. And so they're a key part of the story.
Yeah.
Will never be on the front page of the website, but they are a key part of the story.
Well, good stuff, man. That's a happy note to end on, and really appreciate that. I was going to ask you this, and I guess I'll do it as a closing comment. I wanted to ask what keeps you up at night, and it's don't say me talking to you all night, so because I know you want to get into that suit. But and I know you've had a long day at work, man, because you're traveling, so I know how that is. But what keeps you up at night, and what optimism would you like to share with our our next generation of inspiring real estate investors and developers and
Yeah,
all that good stuff.
I can give you a bit of a list of what keeps me up at night. Uh,
Everything.
everything like, we have a leaky roof right now
Okay.
in my house, so that's not exactly the happiest thing, but, call it first world problems. And I was having this conversation. So from an investment perspective, on the credit side,
Mm-hmm.
the spreads are very, very, very tight. I worry a bit about that, right? So whether you look at public market spreads or whether you look at private market spreads, they're tight. Now, you can argue rates are going to come down on the short end of the curve, so
Yeah,
that's,
increasing a little bit. Yeah.
so gives you a little bit of a cushion.
Yeah.
But we are very, very tight. So, you have to underwrite very well. You have to be very, very sharp on that. So that's call it an investment world perspective. And I do worry about valuations and, generally in the public markets and,
Mhm.
and, you know, how transformative AI is going to be. That's really powering a lot of the enthusiasm in the markets. But I do think about that.
Yeah.
I also think, call it maybe a function in the last 5 years of a lot more angst in the world. At least it feels like that. We have a lot more angst, and the world is changing. I say it's geopolitically a little bit less friendly. So, I do think about that, and I think many people think about that. In the tradition I grew up in, I was told there's many virtues, but the greatest virtue is love. But I do worry about the absence
Yeah. You
of
wonder where that,
virtue.
yeah, that's gone, right?
So,
So,
so that's on that side. So call it, that's what keeps me up at night,
yeah.
generally. Optimistically, let me begin the high level then and go investment
Okay.
wise. We're incredibly innovative, right? And, I mentioned AI, just AI 3 years ago, like, yeah, I mean, it was a big thing, but no- it's not the big thing that it is today, right? We've,
Yeah.
we've developed all sorts of incredible things at warp speed.
Mm-hmm.
And that gives me a lot of optimism for ability to solve the challenges that we have today.
Yeah.
So that's great. Innovation's great. It may not be comfortable, but overall, it's a great thing. From an investment perspective, I do genuinely believe that it's a great time to be starting out in real estate.
Mm.
I think maybe it's not 1995.
Mm-hmm.
But it certainly rhymes like 1995. So, and the setup from 1995 for a few years was quite constructive for real estate. So,
Yeah.
if I were a betting man and I had to choose, 2025 September is not necessarily the worst time. There's many other worse times to be involved in real estate
Without a
now.
doubt.
So,
Without a doubt.
so
Yeah.
it's pretty positive. So I feel pretty constructive that way on real estate. And I also think, particularly for next generation,
Mm.
that the worst thing that you can do is count yourself out. Many people are going to say to you, you don't have any experience doing X, Y, Z. Who do you think you are that you think you can do X, Y, Z? The worst thing that you can do to yourself is believe in. So the best thing you can do to yourself is believe in yourself. Not blindly, not foolishly. Like, you gotta do the work to understand you've got to create the networks, you gotta sort of whatever it is, you gotta hustle, but you have to believe in yourself, and then you gotta hustle. The worst thing you can do is believe in the haters and the doubters. So
Yeah.
that would be my message. That would be my personal experience, which has demonstrated that I have done precisely what people said I couldn't do.
I was about to bring that up. I mean, that's how the whole conversation started, right? I didn't start off in real estate. I didn't start off in this and that, and yet and still, that's what you do at a very high level.
Yep,
It's a great way to kind of tie a bow around this show, if you will. Start here. Here's all the knowledge and experience. Believe in you. I mean, and think about it. If you don't believe in yourself, who else will, right? So it
that's right.
starts with you. It starts
That's
with
right.
yeah,
That's absolutely right.
yeah.
It really does start with you. So that's the number one thing I continue to learn today.
And keep learning. It's the only way to
That's
be.
right.
You don't keep learning and growing, you die, right? So
That's
yeah,
precisely right. That's right.
absolutely.
And it's a mindset and a philosophy around that.
Well, man, it's been a great conversation. As I mentioned, we generally do these in the middle of the workday, so we're like real tight on our timeline and everything else. And This was actually the first show I did late in the day, to accommodate your schedule, and it's actually worked out great because we got to cover a lot more ground as opposed to having to take sound bites and then move on to the next thing because I'm watching the clock. So so I think this was good. Maybe I'll have the team scale it down to a shorter version, you know. But either way, I think it was fantastic. Get your perspective on all this at a higher level. And one thing I always try to encourage, especially young ones, to do is to get out and see the world.
Hmm.
See the world. You need to experience what it's like to live in other places and experience cultures and this and that. Everything is not your zip code and the local Walmart and McDonald's, right? I
That's
mean, there's a whole world beyond that,
that's right.
you know.
Yeah,
Yeah.
that's right. And it gives you a lot of great perspective. It doesn't necessarily change who you are,
Mhm,
but it certainly teaches you back to that growth mindset
mhm.
of how people operate and do things around the world.
Right.
And that knowledge can only help.
Yeah.
That ability to work with people across language and customs and traditions and
Mhm,
backgrounds and so can only help. They may be doing something
mhm.
that you're like, hey, why aren't we doing this here?
Yeah.
You know, they do it that way. And if you learn they do it that way and it's a better way, then you got the opportunity to do it that way over here. So you could see best practice from around the world.
There you
But
go.
I'm a huge, huge, huge fan of seeing the world. There's a lot of good in this world.
Yeah.
There's a lot of interesting things in this world. A
Mhm.
lot of great places to go see,
Yeah.
great cultures to immerse oneself in,
Mhm.
great food to be had.
Yeah.
Just a there's a lot
All
of
of it,
great.
man. All of it. Yeah, I
Absolutely.
I couldn't agree more. I mean, one of the biggest things I've learned traveling the world is just the way people process information.
Mhm.
We tend to look at things one particular way and we build off of that because that's the way we were raised. But if
Yep,
you were raised under a different culture and mindset, you look at things totally different,
that's right.
and sometimes they come up with better solutions. So,
That's right.
and it helps you
That's
realize that nobody's superior, nobody's stupid. I mean, it's just different.
yeah,
There's rich, there's poor everywhere, there's smart, there's dumb everywhere. We're human.
yeah, that's
Yeah,
right.
we're human beings.
Realize we're human.
Exactly. So,
That's
hey, man, I really appreciate it. I know you were running late. I know you had a rough day, and I know we hadn't seen each other in some months, so this was good to catch up and get a
yeah.
chance to chat a little bit. So I appreciate that. It's just been fantastic. I don't know when I'll bump into you again because you always going somewhere and I'm always going somewhere. So maybe our calendars will collide somewhere, pretty soon. But it's been great seeing you. And is there anything you want to conclude with, for our listening audience and for our next generation of all stars?
I really do believe that I'd also, I'd add the hustle.
Hmm.
Like I worked, and probably some people think I still do work very hard, very, very hard. And you have to develop a passion
Hmm.
for what it is you're doing. And if your heart's not there, then you got to look hard on
Yeah.
what is going to get your heart there. But you have to develop a passion. It is very hard to fake it.
Hmm.
And why I say passion's important because you got to feel it. You got to be in it.
Hmm.
And people see that, right? If your head's not in the game, you can't fake other people.
Right.
So and people are smart. They figure it
Yeah.
out. And so you got to, if you believe in yourself, if you're willing to hustle because you actually believe in whatever you're doing,
Mhm.
that is the recipe for success. Everything else generally follows.
Yeah.
Call it hope and hard work. You got
Yeah.
you do have to have you have to have both. You have to
Mhm.
have you have to have hope in yourself. You got to believe in yourself, but you got to have hard work. Hope and no work.
No, no, no. That's
No,
that's just
no.
dreaming. Yeah,
Her,
that's
right?
just dreaming. Yeah, yeah. That doesn't work. That doesn't work. But I'm really happy you brought that up because there's a mindset that I've run across with this younger generation where it's almost like they just want stuff handed to them,
Oh,
and it's like you got to get out there and work for it.
mhm.
You got to put the work in. You got to hustle. And just in conclusion, there was a builder, a developer I was talking to the other day. I had a chance to stay in at his hotel in New York a few months ago, and it was interesting because somebody had said, happy hump day or something like that. And he was like, I hate that term. I was like, why you hate that term? He was like, because somebody who has the mindset of, well, it's hump day, they're working just to get to the weekend.
Yeah.
And they're not worried about what time it is. They're not working from the standpoint of, I got to accomplish a goal and I don't care what time it is, I'm going to work to get it done. They're just working like, okay, it's Friday almost here, I got to get my paycheck.
Oof.
And that type of person is.
Look, I have sympathy because that is a tough way to live life, in my view. Like, it's really tough where you are so preoccupied with getting to Friday. Like, if you just think about lifespans, like you spend 5 days a week doing work generally. So if you're spending 5 days a week looking forward to 2 days a week, that's tough.
Yeah. That's why you got to have the passion and the heart and the desire for what you do. It's like you said, if you're just living for the weekend,
I mean, just
it's a miserable existence.
very miserable.
Yeah.
So, I'd rather not have, I forget the expression of the Sunday, whatever it is, where people get super worried that, oh, Monday's coming up and, they dread that. I mean, I have sympathy because that is tough. And I'd rather be in a place where, I'm actually looking forward to Monday because there's stuff to get done. I'm excited about getting the stuff done.
Yeah.
I personally, I'd rather live that type of life.
Yeah. Amen to that. I mean, I can't just sit around and watch the sun rise and set. I mean, I don't know. People say I got to answer my pants, but I got to be moving, man. I just got to keep going. So anyway, dude, we could talk all night, man. So I'm gonna let you get out of here, let you get out your suit. I'm sure you're ready for dinner. Yes. Gotta call your wife before it gets too late. I get all of that. So we're gonna wrap up. And it's been great, man. It's been great. Like I said, good catching up again. I'm sure we'll bump into each other soon. I'll keep in touch with your assistant on we'll keep in touch, man. I don't have to go through all that. You got my number, I got your cell. We'll keep in touch. And it's been an absolute pleasure. So to all of y'all, thank you so much for enjoying the Mornings with Joel CRE podcast with our special guest, Colin Lynch. It's been a great pleasure. And Colin, we'll see you soon. And folks, join us again next week as we have another great podcast. Thank you so much for being with us. The Morning for Joel CRE podcast is sponsored by ImpactMask.com. That's M as in Mary, ImpactMask.com. The world's most breathable mask that has 99% efficacy, which is higher than an N95 mask, and it won't fog your glasses. Check out the science behind these incredible masks at ImpactMask.com.